All right, let's wait for a few people to arrive. Let me know if I'm audible, if you can hear my voice loud and clear. What do I do? Enter broadcast studio. I stop the camera. I mute myself. This is muted. Share screen. Share. We'll begin at exactly 11:20, inshallah. All right. Is the video still on? Is the video still on? No, not on this one. All right. Okay. Meanwhile, for the people that are out there, you can let me know if I'm audible, if my voice is loud enough. Fair enough. So that it doesn't disturb. What do these options say? All right, let's begin. Okay, so for IGCSE accounting, for any subject that a person has to start studying, the first thing that the person should know is that what does that subject mean, or what is that subject about. So the same is the case with accounting. I'd ask you all to consider a definition of accounting. Just think about it in your head. What is it, and what does accounting mean to you? Take a minute, think about it, and perhaps write it down on a piece of paper that is there with you. Hmm. What does accounting mean? What is the subject matter of accounting? What does accounting discuss? What does it not discuss? Perhaps you could mention what's if there is any myth about it that people think that this is accounting and that actually is not accounting. Okay. You all might have an idea that when we talk about accounting, it actually deals with numbers. So first of all, numbers are involved. Second thing that you must know about accounting is that numbers are there in maths too, but how is accounting different from math? Accounting is okay, let's write these things down. Write these things down as well. Easy, C, 150%. Okay. 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 Uh, so the first thing that we have mentioned is that it has got something to do with numbers. Second thing, you might have an idea that accounting has to do with numbers and business. For example, accounting might be discussing about what the assets of the business are. Accounting might be discussing what's the profit for a business, how much the owner has invested, and such things. So the second thing about the definition is that it deals with numbers and those of a business. Um, if you have these two things in mind, then your answer is close by. Actually, a business has to record and sometimes present its performance. How well is it doing? How bad is it doing? And secondly, there has to be a unified way in which this information is presented. If everybody starts preparing their own information in their own way, uh, the records won't be comparable to one another. Everybody would be doing their own thing, and the profit of one business won't be comparable to the profit of another business. The assets of one business, if they are recorded in a different way from that of another business, where the two business can't compare their records with each other and get to know which one is doing better than the other. So accounting is the art or the process of the process of recording, summarizing, and presenting the financial information of a business. Financial information of a business. Again, accounting is the process of recording, summarizing, and presenting the financial information of a business. That's the first thing. Okay. The second thing might be that, okay, there must be a unified way in which, or unified set of rules in which financial information is to be recorded, summarized, and presented. But is that set of rule, for example, common to a territory? For example, the way the financial information is recorded, summarized, and presented in Pakistan, is it the same uh, way in which it's done in UK or in Russia or in Saudi Arabia or in the UK, the US, all the countries? The answer is that there are a few internationally recognized systems of accounting, and different countries they follow different countries they follow. It's not that they're entirely different. The basic accounting, that's the same. uh, those are called generally accepted accounting principles. In a few cases they also differ country to country, but in for the majority of the case they are the same. Secondly, there is the set of rules which is internationally known as IAS or IFRS. So we have IAS, which is for international accounting standards, And this was the old name. Previously, the board, it had the name IASB. It was revised to IFRSB. So previously they used to issue international accounting standards. Now the same board, it issues the accounting standards under the name IFRS, International Financial Reporting Standards. So, and along with these standards, there are a few explanatory, for example, six and other things which provide further details to what's contained in this IAS and IFRS for the purpose of O level or IGCSE accounting. This is all that we need to know. Second thing that we need to know is that, all right. We have talked about IAS and IFRS. Okay, so there are different standards. For example, IAS 1, it gives an overview of how these accounting standards would work. What are the financial statements which are to be presented under these accounting standards? How different accounting standards they relate to each other. IAS 7, it relates to cash flows, how the cash flows are to be prepared and presented. IAS 2, it relates to inventories, how the accounting records of inventories are to be maintained, what are the different methods of accounting for inventory, so on and so forth. Um, all right. So this is how the accounting would be done, and little by little we get into details of what's written in these accounting standards or financial reporting standards, and how they relate to us. I mean, what sort of accounting do we have to do in IGCSE? We'll go topic by topic, and we'll look at that in further detail then. Um, okay. So if this is accounting, uh, who are the users of financial information of a business? Who are the users of financial information of a business? Okay. I'd again ask you to write those things. If you've got a piece of paper and pen with you, I'd ask you to think about it for a minute and note down who do you think are the users of the financial information, and for what purpose do they use these? Do they use the financial information of any business? So, what do you think are the who do you think are the users of the financial information of any business? Okay. Okay, so number one, the foremost users of financial information of any business are the owners of the business themselves. The owners of the business. They are to use the financial information of a business. What would they be interested in? They would be interested in a number of things. For example, they'd be interested in how much money they have invested in the business. So they'd be interested in their investment in the business. They'd be interested in the assets of the business. What is the level of assets of a business? Or as any one of you might think, they'd be interested in how much profit the business is earning. They might also be interested in how much liabilities does a business have, how much a business does it have to pay to other businesses. They'd be interested in knowing how efficiently are the assets of a business being used. So all these things, they concern the owners of the business, and these answers, they can be found in the financial information of a business. Since they are owners and they have already invested into the business, there might be some people who haven't yet invested in the business. They wish to invest in the business in future. So this set of people, potential investors, they might be interested in the financial information of a business. Again, they'd be looking at the same thing. They'd be looking at the profit as well as the profitability of a business, that what's the current level of profits, and using what assets or what resources has this profit been generated, And is it that this profit that the business currently shows, is it just a one-off thing that, for example, it was earned for just this 1 year, or does it happen repeatedly that year after year this business has been making this profit? Okay, so owners, potential investors, who else do you think? Lenders, people who have lent money to the business. For example, any person who wishes to lend to someone, the first thing that they need to check is that the person who is asking for money, does he have the capability to return that money or not? Does he usually the amounts that are lent, they are on interest. So does that person have the capability to pay me back with interest or not? So they'd look at the profitability of the business, at the profit and loss statement, as well as the cash flows of the business. They'd also look at the assets of the business. Does the business have any assets which they could pledge or which they could leave with the bank as a guarantee? So they'd be looking at all those things, and again, this could be found in the financial information of a business. Owners, potential investors, lenders, managers, and employees as well. Managers and employees of a business, they'd be interested in, for example, managers, they are the custodians of the assets of the business. Usually, it's not the owners who are running the businesses. We would see that in case of public limited companies, the business gets so huge that it's the managers who are actually, the number of owners is so large, and it's not them who are actually running the business, it's the managers of the business. So they'd be interested in knowing that how efficiently they're doing their job. They're trusted with the assets of the business, and what use have they made of those assets? Have they earned a profit? And how does their profit stand as compared to profits of other businesses who have got similar assets, and so on? There'd also managers and employees would also be interested in knowing the profits of a business, because they might be seeking bonuses or performance related wages and such things, that if the business has done well, they might put forward demand for bonuses or extra reward for the good performance that they have shown. Okay, so owners, potential investors, lenders, managers, government. Why would a government be interested in the financial information of a business? A government would be interested, first of all, the government, it has the role of a regulator as well. It has to regulate the financial activity, whatever is happening in the economy. Secondly, so the government would be interested in knowing what sort of activity a business has been carrying on. Secondly, there is a regulatory requirement on different forms of businesses to submit their financial information with the government. And again, in the hindsight, there might be the case the government is interested in knowing, the government and tax authorities, we are using them synonymous over here. Somebody might separate them, but one of, again, the taxes, it's the prerogative of the government to collect taxes. So the government, it has to collect taxes. It would be interested in knowing the financial information of a business, so that it asks them to pay taxes accordingly, and to check whether the businesses, they have withheld taxes which they was responsible to withhold, or they have paid the taxes against their own income which they were supposed to pay. Okay, okay, let's look at the book. Okay, so we've got managers, owners, tax inspectors, investors, bank. Okay, we have mentioned it as lender. So these are the users of the financial information. Okay, moving on. Let's look at what do we exactly mean. Okay, there's one small thing. Okay, here we have mentioned accounting. Sometimes in the past papers, oh, I misspelled it. Accounting. Okay, in the past paper there has been a question as in what is the difference between bookkeeping and accounting. At the IGCSE level, the answer that is given is that usually the recording part that is considered to be the bookkeeping part, and all the other along with other two things, recording, summarizing, and presenting, that is the uh, accounting. So just recording would be bookkeeping, recording the financial information of a business, and recording, summarizing, and presenting, these three together for the financial information of a business, that would count as accounting. Okay, okay. One more thing. Okay, before we get into the accounting itself, let's begin with end in mind. Let's look at what is it that we would get as end result of our accounting. When we do all the accounting, hmm, 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 hmm. Okay, so here is the chain of events. Here is the trail of events or the chain of events. First of all, what happens is that any event which has a financial impact, that would be recorded in the books of the business. Any event which neither today nor in future, it won't have a financial impact, that won't be recorded, or at a basic level, the rule is that it won't be recorded in the financial statements of a business. Only things which can be valued, only things which can be financially calculated, only those would be recorded. First of all, they can be financially calculated, and secondly, they have a financial impact on the business. Those things would be recorded in the books of the business. So first of all, there has to be an event with a financial impact. Okay. The second thing is that this event, first of all, it would be recorded in the form of double entry. We'd look at all these things in detail. I'm just giving you the sequence of events right now. Okay, there would be a double entry for the financial impact, for the financial event which has happened. After the double entry, we would put these amounts in the T accounts. T accounts. Okay. Once we have put the amounts in the T accounts, from the T accounts, we take this summary to the trial balance. And from trial balance, we prepare the financial statements of financial statements of a business. Okay. So what financial statements do we prepare? Uh, a moment ago, I told you about international accounting standards and international financial reporting standards. So IAS 1, it sets out, it says that for a business, when it says that it is presenting the complete financial information, it has to prepare 5 statements. 5 statements have to be prepared. What are those 5 statements? Uh, Number one, it's statement of financial position. Again, we would look at the contents of these statements in a bit. Right now, I'm just giving you a holistic summary or an overall view of what would be the end result of all the efforts that we do. Okay, so statement of financial position is the number one. Number two is statement of profit or loss. Number three would be statement of cash flow, or sometimes it's called cash flow statement. Statement of profit or loss, it has another name, income statement. I think income statement is the old name. In the previous standard, it used to be income statement. Now it's called statement of profit or loss or statement of comprehensive income. Statement of financial position, it's more commonly known as balance sheet, but it's entirely the same thing. It's just change of the name. Okay, so the third statement is statement of cash flow. Fourth is statement of changes in equity. And the fourth one is notes to the financial statements. Okay. So in the first four statements, we're presenting some numerical information. And in the fifth one, we are giving detail of what we have presented in the first four statements. One thing about accounting, uh, unlike physics or chemistry or other subjects of sciences, usually what happens over there is that initially we are given a picture or uh, um, we are given a story about the subject, which is true for that grade, but as you proceed, the story changes. For example, initially you might be told that all elements they are made of, for example, wood or iron or things like that. Then we get to know that all these items they are made up of atoms, and then we get to know that atoms they are not even the smallest particles. Within atoms there are subatomic particles. We begin with three, and as we proceed in science we get to know that even beyond those atomic particles, within them there are quarks and Plancks and things of sort. So the story sort of evolves, or the story sort of changes as we move along. In accounting, these statements, okay, by the way, these statements 1 to 4, they are in the course of IGCSE, and all the students they would learn and they must learn how to prepare these statements, because they get question on all four of these besides other things. So right from the start, we are doing things the way they're done at the advanced level. There is little change. For example, at advanced level, you get to learn more complex transactions. But this set of statements that we have just learned, this is the same that is prepared even at the, for example, if you actually get to work for some company or some business, these would be the statements, and you work for the financial statement for the final accounts, the finance department, and in that we are supposed to present the financial information of the business. These are the statements that you would be preparing. Okay, let me in fact show you an actual example of a set of financial statements. NRL financial statements. NRL is National Refinery Limited. It used to be the largest refinery in Pakistan. I don't know if it still is. There were plans of a larger refinery being built. Let's see. Hmm. Hmm. Is it? Is it? Is it? GSK download annual report. This one is loading. Why isn't this one opening? Okay. In any case, let's look at GSK's. Hmm. 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 Whoa, it's taking longer than expected. Shall I open up previous periods? Let's say 2018-19. Internet's not that slow. Why is it taking this much time? Hmm. Hmm. Yes. Okay, does it allow me to go to the later page? Let's say 166, go to page 50. Corporate governance, go to page 70. Go to page 90. Still. Okay, so this is the auditor's report, and after the auditor's report, this is the annual report of the business. This is the document that a business prepares at the end of its financial year. So it contains a lot of other information about a business, and then it contains the auditor's report that they have audited the financial statements of a business. And then there is this set of financial statements. So it begins with statement of financial position. Then we have got statement of profit or loss and other comprehensive income. Then we have got statement of changes in equity. We learn to prepare all these statements as we proceed in our course. Right now, I'm just showing you that this is the way things are. Then we have got statement of cash flows, and finally we have got notes to the financial statements. Okay. Okay, let this one open up. Had this one opened up. Okay, let's check in unaudited one. This one would open up. All the financial statements, as long as they're prepared on IAS, as they are IFRS, International Financial Reporting Standards, they'd be prepared along the same lines. These would be the five financial statements that would be there in that set. Okay, okay, here it comes. Okay, so here's the statement, condensed interim statement of financial position, statement of profit or loss. Then there is comprehensive income, statement of changes in equity, statement of profit or loss. It also has a component of statement of other comprehensive income. That is not there for the IGCSE course. It's not part of even the A levels course, A level accounting. You'd learn that if you go on to pursue ACCA or CA certification or BCom or some degree in finance. But at this level, it shouldn't concern you. Then there is statement of changes in equity. I think it's readable. Is it legible? It must be. Okay, and then there is statement of cash flows. And then there is notes to and forming part of the condensed interim financial information. So as long as financial statements are prepared using the IAS and IFRS, they would contain these five statements. Okay. Okay. Moving on. Moving on. The next thing that we are to learn is the first thing that we learn in our accounting is the accounting equation. Accounting equation. Okay. What does the accounting equation say? Accounting equations say that all the assets of a business. Okay. So what are the assets of a business? Assets of a business, to give you a simple definition, these are the items that a business owns and controls. So there are two conditions for it to be an asset. It should be an item which a business owns and it controls, and it would give some benefit to the business in future. An item that business owns and controls, which would give it some benefit in the future, that would be an asset. Okay, so for example, the property, a building that a business owns, that would be asset of the business. If a business owns any vehicles, that would be asset of the business. The bank balance of the business, that would be asset of the business. The items that a business has got, which it plans to sell, which we call the inventory or the stock in trade. For example, if I run a business of laptops, or if I run a business of let's say tablets and phones, all these items which I've got with me, which I plan to sell, these would be my assets. So all the items which a business owns and controls and which would bring some benefit to the business in future, they are the assets of a business: property, plant, equipment, vehicles, all of them. So assets of a business, they are equal to, assets of a business are equal to, okay, there could be only two sources for a business to buy an asset. A business could buy an asset by the owner's money. For example, the owners, they invest money in the business and the business buys assets using that money. Or the other source of finance for the assets of a business could be that a business borrows from someone. If I want to start a business, I need some assets to carry out the business. There are only two ways I can get those assets. Either I invest my own money or I borrow it from someone else. So if I invest my own money in business, in my own business, that would be called capital. That would be called capital. And if I borrow money from someone, that would be called liability. The amounts that I've borrowed from other people and which I have to return. Again, all the assets of a business, they are equal to capital plus liability. Or instead of capital, uh, I would use the term, or I could write the same equation as uh, assets are equal to equity plus liabilities. Since I've written that in plural, it is okay. This is the better description to equity plus liabilities. To begin with, we are discussing only one component of equity, which is capital. And okay, I'd ask the students to copy both of these equations down. Right now, we'd be using this one. Assets are equal to equity, sorry, capital plus liabilities. I don't want to get into the difference of equity and capital right now. We'll discuss that later later during the term. But right now, just note that assets, that they are equal to capital plus liabilities, or I could write assets are equal to equity plus liabilities. I'm giving you both right now, and I'll give you the difference of capital and equity later in the term. Okay, so again, what does this equation say? This equation say that whatever the assets of a business are, if I own anything in the business, there is only two sources of finance. There are only two possible sources of finance for that in the business. Either I invest my own money, which would be capital, or I borrow money from someone else and then buy that asset. That would be, I'd get the asset, but I'd also have a liability in that case. So with this knowledge, by the way, statement of financial position is prepared, or the balance sheet is prepared on the principle of accounting equation. So the structure of the balance sheet is the accounting equation itself. Hmm. 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 Let me also give you the structure of statement of profit. Statement of profit or loss is the broad structure of statement of profit or loss is that if I've got income and I deduct expenses from that, so income minus expenses is equal to profit. That's largely the structure of statement of profit or loss. Statement of cash flow, they are built on the structure. This we discussed later. This we discuss later. Statement of cash flow, statement of changes in equity. To begin with, statement of financial position, it's drawn on the principle of accounting equation. The assets, they're equal to capital plus liabilities. Statement of profit or loss is drawn on the principle of income minus expenses is equal to profit. All right, let's take break for a couple of minutes, and then we'll start using this accounting equation again. We'll begin our questions. I mean, the first few examples that we'll be doing, or the first questions that we'll be doing, would be the ones involving accounting equation. And we'll start doing that in a couple of minutes. Hmm. I want to check something. Past papers. Hmm. 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 IGCSE. Hmm. Accounting. Mondays we dedicate to past paper analysis. Every Monday we'll be discussing and solving past papers. The rest of the days, Tuesday, Wednesday, Thursday, and Friday, we'll inshallah discuss the course content. Okay. Hmm. Hmm. This one. Background. Hmm. 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 Do we have? Hmm. 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 This one. Hmm. This one's still old. Okay. Okay. Hmm. Hmm. Let's see 20. Hmm. This. This. Just a second. All right. We'll be using the book of Frankwood for the practice. And along with that, once we have covered a few topics, we'd start solving the examples of relevant topics from the past papers. But to begin with, and for initially when we study a topic, we'd be covering the examples from the practice examples from the book Frankwood, Business Accounting by Frankwood. Okay. Okay. So the first transaction that we are given is on 1 May 2007, B. Blake started in business and deposited £60,000 into a bank account opened specially for the business. Okay. 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 So we have got B. Blake. Okay. So what we would do is For every event that happens, we would write the accounting equation. We would keep on updating this accounting equation. And then along with this, we'd be making the statement of financial position of that business. Okay. So accounting equation, what's the date? The date here is 1 May 2007. So 1 May 2017. Accounting equation is assets is equal to capital plus liabilities. So he starts business with assets of 60,000 and that is equal to capital or equity because he has invested that amount in business. This and there would be zero liabilities. So this shows that accounting equation is satisfied. Okay. Next we learn how to draw the balance sheet of the business. So first of all, put the name of the business, B Blake. Then we write statement of financial position. Okay. We Blake statement of financial position. When is this statement of financial position drawn on what date? On 1 May 2007 because this event has happened on 1 May 2017 and we are drawing the financial statement on that date. So this is statement of financial position as at 1 May 2017. Okay, so what has happened over here? He has got assets and first we give the heading assets and within assets we have got an asset with the title bank and how much money he has got in bank amount short amount in pounds. Where is pounds? This one is pounds. This one. Where is the symbol of pounds? Why can I not read it? Okay, let's do with dollars. Okay. Okay. He has got how much money in his bank account? He has got 60,000. And then this is his total assets. His total assets are equal to 60,000. Okay, I'd encourage you to learn the format as well. It's in accounting, format matters a lot. So this is how the financial statement of financial position is drawn. You do well to use this format right from the start. Okay, just a second. Get over here. No, not here. Okay, and what about what about over here? Must be, it should be. No. Then we have got equity. Give the heading equity. In equity, we've got capital. Okay, so remember I told you that we can write assets are equal to capital plus liabilities. So capital is a subcomponent of equity. Equity is basically the residual interest of owner in a business. So if a business has got assets, we take away liabilities from those assets. Whatever remains is the ownership, or that is the residual interest of the owner in the business. um, a big component of equity, initially the only component of equity is going to be capital. That is all, that is the interest of the owner in the business right now. Later on we would look at the other components of equity as well. And liabilities, control P, there is none, so I write total equity and liabilities. Total equity and liabilities. It is equal to this. So now if you look at let me zoom out a bit. Hopefully, yes. So this is the statement of this is the statement of financial position of the business at this stage. That the only asset that he has got is that of bank, and that constitutes his total assets. Capital, he has got 60,000, he has got no liabilities, so his sum of assets is equal to his sum of equity and liabilities. Okay, let's look at transaction number 2. This was the initial transaction where he introduced capital in the business. Okay, the purchase of asset by check. On 3 May 2007, B. Blake buys a small shop for 32,000, paying by check. Okay, so let's consider the effect of this on the accounting equation first, and then we will draw the balance sheet or the statement of financial position for this one. Okay, so what has happened to the assets side? What has happened to the assets is that initially he had assets of 60,000, and that was all in the form of a bank account. Now, using that bank account, he has bought another asset, which is a shop, and he has paid for it 32,000 by check. So his asset of bank has reduced from 60,000 to 28,000, and along with it he has got another asset which is 32,000. So total assets, they remain the same. Total assets remain the same, but now there is a split. It's not all in the form of bank account. Some of it is in the form of bank account, and some of it is in the form of check. Sorry, the shop that he has bought. So he's got two assets: the bank account 28,000 and the shop worth 32,000. The capital remains the same. There is no additional input of capital by owner into the business. He hasn't taken any capital. He hasn't done any drawings from the business. Capital stays as it is. Also, he hasn't taken any loan or assumed any liabilities. Okay, so let's look at what would happen, or what change would happen to the statement of financial position. I copy the same one over here. Let's see, Control V. Now it would be statement of financial position on 3rd May. It would be no longer on 1 May, it's on 3rd May 2017. The asset of bank has diminished to 28,000. He has got another asset which is shop, and the shop is worth 32,000. So the total assets, they remain the same. They are the sum of shop and bank, and equity, it also remains the same. There is just capital in it and there is no liability. Okay. So this is what his statement of financial position would look like on 3rd May 2017. If you can notice, or if you can compare, the only difference that has arisen is in the breakup of this bank. It used to be 60,000, now it has become 28,000. And along with it, there is another asset of shop, which is worth 32,000. The total assets, they stay the same, they are 60,000. The capital, the owner, which has the amount which the owner has invested in the business, it has stayed the same. There hasn't been any change to it. And again, the accounting equation is satisfied that the total assets are equal to the sum of equity and liabilities. All right. I think we will keep the lesson till here. Tomorrow, inshallah, we'll do further detail of further detail and further examples. We'll build this case further. What happens next as more assets come in? This is and also to give you another thing, that this is a very basic shape of what a statement of financial position looks like. As we, for example, progress with our course, we'd learn more things about it, and its form would evolve. Its structure would stay the same, that it's built on the principle of accounting equation, but its form would evolve. There would be more subheadings that would come into play. Okay, so let's keep it till here and see you tomorrow with the next lesson.